Is the housing market going to flip? Let's figure it out. My name is Carmen.
And I'm Darius. And yes, absolutely the housing market is going to flip because if you remember back in 2008, we were having the opposite conversation about what we're having now.
Yeah, and what goes up usually comes down.
And what goes down usually goes up.
Yeah, exactly. So we have both of our cell phones here because we have a lot of notes that we want to go through with you, a lot of stats, and we want to make sure that you understand where all of this information is coming from. Now, we're basically rooting this in our own opinion based off of the stats that we see online. So we want you to have the stats and make your own opinions of what you think is going to happen.
Yeah, and what we've come to learn about this current housing trend that we're in is there's a lot of things that need to be taken into consideration when we look at this. There's some trends that are affecting this housing market boom.
It is. And the first thing that I want to hit you with is home prices are up 19.5% as of July, and this is 2021. So just think about that. Almost 20% houses have increased. And that's a significant amount of money, especially if you are the one looking for a house.
Yeah.
Now these days, it's really interesting where you see homeowners trying to purchase houses and just the interest rates for mortgages are at an all-time low now as well. So it's a sticky situation where we're in right now as far as houses being so much more expensive, but then the interest rates being so low.
Yeah, and that's one of the reasons why the housing prices are up so much, because there's this demand for more houses than what we actually have an inventory for.
Yeah.
So if there's more demand than there are supply, naturally the price is going to go up. And on top of that, you also have people competing for houses because there isn't enough houses to support the people that want to actually buy a house.
Yeah, there isn't enough demand.
There isn't enough demand there. So what we have is we have supply shortages because there isn't enough material to build the homes. And what happens is it goes to the people who have the money, and the people that have the money, the prices go up as a result of that.
So basically what you're saying is that he who has the gold makes the rules.
That's always the case, no matter what the situation is. And we see that first and foremost in this situation because the people that have the money are able to
have the highest bidder.
The highest bidder, they're able to prioritize the material that becomes available to build their homes because they have the money.
And also, too, the existing homes that are out for inventory, the houses are always going to go to the highest bidder, those who can afford to drive the prices up, unfortunately. And really what that comes down to is when you think about the home buyer these days, they are desperate because you'll see there are at the minimum sometimes of 10 offers on houses just in any city so that they can continue to move the inventory. So when buyers are desperate, that's going to change the market drastically, either for the better or for the worse. In this case, you see that is driving the prices of houses because the buyers are so desperate.
Now, that's on top of the already high prices that people are overbidding for houses. They're overpaying for houses that are already high in price. So that's not good, right?
No, and to back that point up, the homes sold above list price is 55%. And this number is countrywide, not just talking about a specific city, countrywide. 55% is the amount of homes that have been sold above list price.
Wow. Now, another reason why prices are higher is because of inflation. And according to the U.S. statistics of U.S. Bureau of Statistics, inflation is up 5.4%. That's almost double compared to where it was at 2.5 at the last time checked.
Yeah, that's ridiculous.
So you have inflation up. That means your dollar is doing less work. You have increased prices as a result. You have people overpaying on top of the already high prices. So where's the end? Where's the end of this?
We don't know. We don't have the crystal ball, but we do know. Do you guys see where we're going? Everything is trending up, and we kind of get to the point where we were like, okay, well, what's going to happen?
Right.
So let's continue to go through some of these statistics. So we already talked about, basically, let's call it 20%. Houses are up 25%. 55.5% are overpaying for their houses. The median house price is $385,650. And the amount of houses sold fell 6%. And the amount of houses for sale fell 32.2%.
Wow.
So going back to your point, Darius,
Supply
and demand. Supply is low, demand is high, and that's why now it is a seller's market. And you always find people typically say do the opposite of what the majority of people are doing, is because when you find that there's such a significant seller's market in this instance, everyone's trying to sell.
Everybody's trying to buy.
Everyone's trying to buy the inventory. In that instance, you need to do the difference, do the opposite. But what happens when you do the opposite, which is selling? If you sell your house, what do you are now back into the buyer's market, and now you just realize that you're going to have to overpay for a house to get into it, and houses are more expensive. So what do? Just rent a house or live in your mom's basement until the market crashes?
Yeah, you live in the basement.
No shame in that.
No, that's what you do.
Collect on your funds,
because rent's up as a result. Everything is up. So if you sell your house right now, yes, you'll make money, but you'll also give that money up when you move into another place. So if there's an opportunity for you to sell your house and then sit for a second, let's say you have multiple houses. If you're an investor, you have multiple houses. Maybe you move into one of your investment spaces.
Yeah. But we were talking about this with a friend of ours, and he was talking about the equity that he has in his house, and he was like, oh man, if I sell my house today, I'll make so much money, but then I'm going to spend a ton of money trying to look for a house, or I may be homeless for a while because of the bidding wars that are out there. Right. So these are things that you have to keep in mind. It may be a smart move for you to sell your house. You just have to figure out where you're going to live in the interim until prices kind of calm down a little bit.
So what are interest rate 3% now? Now, I wouldn't be me if I didn't bring up this.
Here we go.
The amount of interest that you'll pay on a 30-year mortgage. Yes. Because I think what's happening is because of the pandemic, a lot of people have been in their homes and they realize that maybe this isn't the space for them. Yeah. So they want to transition out of the city into suburbia. They want to transfer into a bigger place. Whatever the reasoning is, people are moving or want to move. Now, what does that mean if this is your first house? That means you're getting a loan for the very first time and you're paying 3%. $385,650 is the median price for a house in the United States. At 3% interest, the amount of interest that you pay over 30 years is $200,000, $199,741, I think. That's how much interest you'll pay. That's without putting down a 20% down payment. Even with a 20% down payment, what you'll spend is you'll buy a house, I think, for $308,000, and what you'll still end up spending is like $159,000 in interest, even with the down payment of $80 something thousand. So if we're thinking about moving, we also have to take into consideration how much more we're going to be paying on top of that because of interest. So we have high prices. We have 55% of people overpaying for an already high price home because they're bidding, trying to get other people out of the circle. Yeah. But then we have to pay interest on top of that.
On top of all of that.
On top of all of that.
So hold on a second. We need to do our due diligence. I want you to say all of that again, slower. So let's go over the calculator first, because you all need to understand what Darius just said. And because he speaks in numbers, he said it in like 30 seconds. So I want to make sure for those of you who are still calculating in your head, maybe it's smoking a little bit. Let's bring it back down. Okay. So we talked about the median price of houses is $385,650. Okay. That's the median price. Let's just say anywhere you go, that's the average price of homes. Now we're going to tack on a 3% interest rate, because that's the average interest rate right now that the mortgage companies are offering. And that is going to pay, then that individual is going to pay how much in interest?
$199,000, $199,741.
And that's just interest.
That's just in interest. So for your $385,000 house, you pay more like actually, let me get the actual numbers for you.
Yeah. So that you can understand exactly where the picture that we're trying to paint here. Yep.
So your monthly payment would be $1,625.92. Your total payment over the 30 years would be $505,331.20.
Yeah. So you said over $190,000.
$199,681.20 will be the total interest that you pay.
On top of it. And right now we're just talking about the housing market currently, right? So let's assume you had to bid higher than the list price. And let's also assume that we're tacking on a 20% increase, right? So not only is the house more expensive that we just established because of inflation, because of the market, now let's tack on that 3% 5% interest rate, and now you're paying $190,000, let's just call it $200,000 more in interest for this said house. And nothing's wrong with it, right? It wouldn't be the Wealth Nation channel if we're not here to educate you and tell you what's going on.
Right.
So the one thing that I would say with that is definitely click on the link below if you want to know how you can create your own banking system so that you can recapture all of this interest that is leaving your household on a monthly basis. Your mortgage is an amazing opportunity if you have the money inside your cash value life insurance policy to start recapturing some of these interest fees that you're paying on a monthly basis.
Now, the moral of the story is, I hope a lot of these people that are buying houses, if you're in the market to buy a house, you didn't just wake up and say, I'm going to spend $385,000 because I got approved for it. You should take some time and save up and make sure that you're making a really good decision because of everything that's going on. Just because the bank tells you that you can afford this house and you can afford this monthly payment of $1,625.92 is not taking into consideration insurance, not taking into consideration you're moving. It's not taking in consideration HOA,
electricity,
all that stuff. The only thing we're talking about is just the mortgage itself.
Yeah, and that's where people get into trouble. And I know we're talking about is the housing market going to flip, but this is where people get into trouble because now we can even talk about forbearance, right? Because guess what happened? We had a pandemic.
Yes.
And that crushed so many Americans, 2 million in fact. Their houses are in forbearance. And guess what's going to happen when those forbearance clauses are no longer valid?
Yeah.
2 million Americans. I don't know if y'all heard me the first time. 2 million Americans are in forbearance. That is going to shred this housing market when those houses start to pop up, because we don't even know if these 2 million individuals now have established work, established income. We don't know what's happening, and people have continued to extend. And right now the banks are at the point where they're not going to continue to honor these extensions.
Yeah. And even taking into consideration unemployment.
Oh,
so
man.
we have unemployment. That's an issue because people aren't necessarily, it's not that they can't find a job, is that people aren't trying to go back to work because of the experience that they had as a result of pandemic and starting to rethink how they working from home and with flexibility and work-life balance
with
and
the Great Resignation.
Happiness. Yeah, the Great Resignation.
So it's twofold though, because we're talking about the Great Resignation where people are recognizing like, wait, I'm worth more. I demand more for myself and I'm going to go figure that out. Maybe it's me creating my own business, whatever that may be. But then you also see people who are in the service industry who are making bank with unemployment and say, you know what, I don't need to go back to work because the government's working it out for me.
Yeah, then some people made more money not working than they did working with.
That's what I mean.
Yeah. So there's a lot of things that go into place with this housing market, and I think this is a very unique situation that we're in with this seller's market that we're currently experiencing. How much of it is an effect of as a result of the pandemic? How much is it a result because people are experiencing being in their houses more and they want more for themselves or a bigger place to live? There's a lot of things that come into consideration when thinking about this housing market. Is it going to flip? Yes, it's going to flip because that's just what happens. It happens with the stock market. It happens with the housing market. It always shifts from buyers to sellers to buyers market. So we have to really think about what position do we want to play in this. If we're an investor, no, now isn't a good time for us to invest in a house because it's too much. Any investor, what they want to do is buy for the cheapest amount and sell it for the highest amount. And if you buy it at the top of the market, it's going to be really hard for you to sell it.
And not only not hard for you to sell it, it's just going to eat into all of your costs and your budgeting. And even if you try to get supplies these days, you just don't know how quickly you can get lumber.
Yeah.
So it's all these things that you have to think about. So what we want
the cost of lumber's up, the cost of copper's up. Like it's ridiculous what you'll have to go through in order to invest in this market now. So investing is a no-go right now.
And really it's about understanding the best play. You're starting to allude to this. So if you are a seasoned investor, if you're someone who's thinking about investing in the real estate market, then always buy houses when they are the cheapest. So right now what's happening is Americans are scrambling because they're trying to get houses. There's low demand. There's high demand. There's low supply. And it's going to come to a point point where it's all going to come to a head. And that's where you'll see a lot of the investors these days are going to come and buy up the block because now everything's on sale, and they have been waiting for and stacking their chips so that they can buy as many houses as they possibly can on wholesale.
And buyers also have buyer's remorse after the fact.
Oh yeah.
There's a 75% of people after they buy a house have buyer's remorse.
Yeah.
According to a statistic that we saw online, 75% of the people that buy a house have buyer's remorse after they have their home.
That's a lot. And it's really just the pressure, because when you think about relocating, all you want is to make sure that your family has shelter, and you search and search and search and bid and bid and bid. And next thing you know, you have the shelter, and then you get there and you're like, this wasn't really what I thought it was. Or maybe it's more expensive than I imagined, because again, going back to your point, what we just look at is the monthly payment and say, oh, I can afford the monthly payment, but we don't take into consideration all the other costs that come with this monthly payment. And we can be significantly over leveraging ourselves if we're only looking at that one factor.
Right. Now, again, we wouldn't be us if we didn't talk about life insurance, because when it talks about becoming your own bank, think about who you're paying all this interest to. Now, if you are new and you want to establish over time your ability to purchase a house without having to go to a bank, then using overfunded life insurance will be good to finance your home, because you get to earn all that interest instead of paying it to the bank. Now, on the other end, there's a lot of people that get into the housing market, they want to get their house right now. So they go to the bank and they say, how much can I afford? And then they take this to their realtor and say, this is how much I can afford. Yeah. Haven't done any due diligence, haven't saved up any money. And those are the people who most of the time regret it. So 75% of the people do that because they hadn't actually done the time and thought through over the years how they want to finance their home. So for those of you who are making emotional decisions, becoming your own source of finance isn't for you, is something that's going to take some time. But for those of you who are willing to put in that time and want to understand a little more about it, make sure you click on the link below and watch our video so that you can then talk to an agent and get your questions answered.
Absolutely. So we think that the housing market is going to flip. We just don't know when, but based off of the statistics, knowing that houses are much more expensive, there is high demand, low supply. At some point, this is all going to come to a head, like I said before. So it's just making sure that you are always positioning yourself in the right place, the most strategic place possible, so that you can create as much cash flow for your family as you can.
Yeah. And based on the next stimulus check that's coming out, the prices are going to continue to go up. So this year, maybe even the end of next year, may not be a good time to buy a house if you're looking to invest. If a house is something that you need absolutely right now, then absolutely do it. Just don't get into a bidding war to do it.
Yeah, exactly. And there's nothing wrong with waiting too. A lot of times people get into FOMO and they think, oh, I have to get into this bidding war, and just be patient. Take
Fear of missing out is what FOMO is.
Exactly. Fear of missing out. So if you can stay with a relative, if you can rent, if you can do something other than pay more for a house, then just be patient and make sure it happens.
Yeah. A house is a huge investment for anyone. So make sure you do your due diligence. That's the most important message that we can give to you today.
Exactly. So what we want you to do right now, if you don't know about what we're talking about using whole life insurance to finance your lifestyle, then check out our next video where we teach you all about it. And remember to own your own lifestyle.
Or someone else will.